All right. Well, thank you for stopping by my channel today. My name is John Mazzara with Remax Results. I have a special guest today, Lynn Anderson with Movement Mortgage, and she's going to share a wealth of knowledge and experience in the mortgage business and some special programs. So, with that, let me introduce Lynn. Lynn, tell us who you are and a little bit about yourself.
Hi, John. Hi, audience. My name is Lynn Anderson. Some people hear me go by Lynn Bohm Anderson. I am a mortgage loan officer. I've been doing this for 20 years. I've been in the financial business for 43, but have been passionate about helping people get homes for the last 20 years. I work with Movement Mortgage. Movement Mortgage is, I believe, number 6 of mortgage companies in the United States. So I'm very proud. And not only are we an excellent mortgage company, but my why I do what I do is 48% of the profits at Movement Mortgage are given away in a lot of philanthropic ways. One is building schools for underprivileged children, giving out grants in the community. So we do a lot of things that most mortgage companies don't do. So 48%, that's a lot.
That's a lot. So you're almost an ESG company of sorts. Are you
Almost.
publicly traded?
We're called a impact lender. An impact lender is someone who gives away 10% or more of their profits. Movement gives away 48%.
Wow. Okay. Well, very
Proud
nice.
to
I
work
know
here.
I'm sorry, go ahead.
No, I'm proud. I'm very proud to work here. So
Excellent. I'm with the Children's Miracle Network. I'm what's called a miracle agent. So I give a portion of my commissions after the closing also. So yeah, giving back a little bit when you've been given so much is a good thing. So yeah,
well, lots to be
wonderful.
grateful for, that's for sure.
Absolutely. Well, then I know you work with all different incomes and spectrums and buyers. Tell us a little bit about maybe some of the first-time buyer programs, somebody that thinks maybe that home ownership, requires a 20% down payment and maybe an 850 credit score. And we know those are both false, but tell us what it would take as a minimum for a buyer and what might be available.
Well, if you don't mind, John, I'm going to back up and just start at the
Sure.
beginning. I love all my clients, but I'm particularly fond of my first time home buyers. I like to educate. I like to coach. I like to cheerlead. You can do it. You can do it. So I really love my job. And so a lot of what I do is educating people. And so where I start is that there are 4 things that we need in order to approve somebody for a mortgage. I try and break it down as simply as I can. Number 1 is reasonable credit. We want to make sure that the people that we're getting approved have a good track record of making their payments on time. Number 2 is a 2-year or more steady job history. Does not have to be the same job, but we want to see that somebody has been employed or has income flowing for the last 2 years or more. Number 3 is a debt to income ratio. We want to make sure that we set people up for success. So we want to make sure that your minimum payments on all your debts, along with your new house payment, does not exceed approximately 50% of your gross monthly income. And the number 4 thing that we need is money. So when you buy a house, you do need to have some money. And this is where down payment assistance could come in. So some of the sources that we use to pay down and pay closing costs is savings. Could use your savings account. If you don't have it there, you might be able to get a gift from a family member, or more than one family member can gift you money. The next place might be a 401k loan or withdrawal. And if none of those things work for you, then we look at down payment assistance. And so back to your question, down payment assistance is more widely available than a lot of people know about. And a lot of lenders don't talk about it because they either don't know about it or they are a little more work. However, we do, or I do, whatever works best for clients. So my favorite program is Minnesota Housing Finance Agency, MHFA for short. So that's a state program where you can get money, whether you're a first-time buyer or if you're not a first-time buyer. Now, keep in mind, a first-time home buyer is defined as somebody who hasn't owned a home for 3 years. So somebody may have owned a home in the past, but they haven't owned in the last 3 years due to whatever, divorce, displaced, they moved across the country. But if they haven't owned a home for 3 years, that defines them as a first-time home buyer. With Minnesota Housing, it's good in any city in Minnesota. So if somebody buys in St. Cloud, for example, they can use the funds through Minnesota Housing. Keep in mind that there could be some income restrictions. It depends on how many people are in the household, etc. So we have to make sure that they're within that income guidelines. All the programs that we'll talk about today have income caps. So they want to make sure that that money is used for the people who really need it.
Awesome. And I know in the MLS too, there's a button on all the listings that we can click on that shows all the down payment programs specifically that might be applicable to that location. And I know you do beyond just Minnesota Housing Finance Agency. So a lot of the city down payment assistance programs that would be specific to an individual listing you could do as well.
Right, and
Correct?
sometimes we can layer them. Sometimes you can do Minnesota Housing and another program. So a couple of months ago, somebody bought in the city of Blaine. They were first-time home buyers. I ended up getting the money from Minnesota Housing, and I ended up getting them city of Blaine money. So they ended up getting around $28,000. Now, keep in mind, most of the time, down payment assistance isn't free. It's usually deferred.
Mhm.
Most of the programs, you have to pay it back. Most of them, you pay it back when you sell the house someday. Most of them are interest-free. So this couple that I ended up doing the loan for with Minnesota Housing and Blaine, those are deferred funds so that when they go to sell the house someday, they'll have to pay that back. But no payments and no interest. And Minnesota Housing, just to finish up on Minnesota Housing, they have different programs, some for first-time home buyers, some for repeat buyers. So it just depends on the family size and the income, etc. So that's why you want to use a lender who's familiar with these programs so that they can find the best program for you.
Mhm. And with regards to lenders and loan officers, there's a wide variety of experience and the desire to want to take on these and the lenders that are certified. So I had a listing recently. They made the offer of 315. I'm the listing agent, and they weren't uh, really qualified to get there. And so I offered to the other agent to make an introduction to lender or lenders that could use some of the down payment assistance programs to help them get in the home at, at the price that we were listed at. And she's like, no, we're comfortable just right where we are. So it's really unfortunate that a buyer that could have bought my listing ended up not buying my listing because they weren't given the opportunity to know about the different financing that might have worked, both from their lender who couldn't provide it and their real estate agent who refused to make the introduction. So, and the nice thing about what you're doing is that you're actually taking the time to do 2 or even 3 files on a file. And that's, I think, one of the big resistances is that a lot of loan officers don't want to do the extra work, whereas in your case, it's a mission, and it's a mission of love, if you will, to help somebody rather than just transactional and jam it through. You're not what I call a rate quoting monkey. Um, so you actually want to help people and will do the extra work, and that's where a lot of loan officers, I'm going to say, fail. They're either not certified or their company's not certified to do the loans, or they just simply don't want to do 2 or 3 loan packages combining the down payment assistance, and so they don't even mention it when the buyer really could have been helped by it. So, kudos to you for wanting to like stack that program in Blaine and going through that extra effort. That's like doing 3 files and getting paid on one. So, but that's nice that
Well,
that you.
it's not about the money for me, John. I just think
Oh,
everybody deserves safe, affordable housing. Now, that doesn't mean everybody should buy a house. It just means that for the people who want to buy and have the ability to buy, I want to be their guide. I want to be their coach. I want to make sure that they get what they deserve. So,
yep,
and that means good service. So,
yep.
one quote that came to mind when you were talking about lenders and realtors, my quote is, all realtors and all lenders are not created equal.
Very true. Yep, you've been doing it 20 years. I've been doing this 37. I've sold over 1,200 homes. I'm familiar with the landscape, and that's the thing. It doesn't cost any more to work with you or to work with me. And the experience, in my opinion, will be different than if you work with your friend or family member that's been doing this 3 months, or maybe doesn't have the depth and breadth of the experience. And so they can only share what they know, which might be very limited. And where I really see it is in the investment property. So I've been owning and managing investment properties since I got in the business back in '86. I started managing my father's properties. And the number of realtors that actually are involved with owning rentals throughout their career is like 3% or less. So where I really see a mistake is an agent working with somebody on rental property that has never done it or did it a while ago and really has no idea how things have changed. And that's a minefield. So, I mean, I think you should work with somebody that's experienced, period. But if you're going to buy rental property, oh my God, you need to work with somebody that is in the game at present, or you will probably make some very big financial mistakes. And I know Fannie now just changed the rule with the 5% down. So if you ever thought about owning a rental property and starting as an owner occupant, that's something that Lynn can do through FHA with 3.5% down, or with conventional now with 5%. And maybe Lynn, I'll just kind of toss that back at you to talk a little bit about owner occupied rental property as an option and how that can be combined with some of the down payment assistance.
Right, so like John said, is the rules just changed. It used to be 15 or 20% down to buy an owner occupied 2-unit or more property, and that just changed. So now on a conventional loan, you can do as low as 5% down as long as you live in one of the units. So let's say you bought a duplex and you decide you're going to live in one half and rent out the other. You only have to put 5% down. And there could be some down payment assistance programs that might support you in that particular situation. So
Right.
that's a big win. That's a really big
Huge. Yep. When I first started when I was 21, right out of college, my buddies were all single and I sold them all duplexes. Well, not all of them, but I sold a number of them duplexes. And back then you could buy a duplex for 100 grand and you get $1,000 for rent for the other side. And effectively you were living for free. Now it's not quite that good a deal right now, but nonetheless, you will have somebody, meaning the renter, offsetting your payment and helping you create wealth and something that later you can keep as part of your portfolio or pay for your children's college if you decide to have a family and decide to pay for their college or part of your retirement. So there's lots of advantages to starting there first if you're willing to be a landlord. And again, you need to work with an agent that will guide you correctly, because many agents have no experience in that realm. But that's great that they just opened that up, and I know that's been a kind of a big buzz. There aren't that many duplexes, for sale at any given time. But if you get qualified, you can look at and set up a search for that in addition to the home search, regular single family house, and there might be an opportunity that presents itself. So it's just another option for a buyer. So some of your other programs, Lynn, that you have that I know that are a little different from other lenders. I was at that luncheon that you had with regards to the reverse mortgages and how that can be used for both a purchase or to help somebody in their existing home, maybe to free up some cash flow. I had a client call yesterday and they said, John, basically I live up in Pequot Lakes. I have $1 million property and the county keeps raising my taxes and I'm retired on a fixed income. And I said, Dan, his name is Dan. I said, you need to look at the reverse mortgage as an option, because your asset base, your assets that you have in your pension and Social Security, they're not converging with your expenses. You don't want to move off of your piece of paradise. And this reverse mortgage could really be a fantastic tool. So, Lynn, tell us a little bit more about what Movement does, and because that's very unusual. So tell us about your reverse mortgage program.
So thanks, John. So number one, Movement Mortgage is a full service lender. We offer a lot of products and we do some brokering out of products. So we offer things that a lot of places don't. Reverse mortgages are one of them. That's for people who are 62 or older that can take out a mortgage. It's called a reverse mortgage, where they don't have any principal or interest payments. Those payments go away. So instead of reducing your balance on your mortgage, the balance goes up, but you have a lot of equity. So Think of, that's a game changer when you think about not having to make a payment every month. You still have to make your taxes and insurance. Movement Mortgage, one of our favorite programs is DSCR, which is for investors. So if you're an investor, and normally when we ask for your tax returns and your income statements, they're cumbersome. People don't show all their income. So instead of asking for income docs, when we do our DSCR loans, it just means that we're going to look at your credit score, and we're going to look at how much income that property is going to be bringing in. We want to make sure it's a positive income, not a negative. I think there's a 6-month reserve requirement. But other than that, we do not dig around in your debt to income ratio. We don't dig around in your income. We just go by the profitability of that particular house that you're buying. We also do. Go ahead. Go ahead.
Just ask you if there's a size limit on that loan. Is it $100,000 minimum, do you know, or is it on the DSCR
I
loan?
believe it is a 100,000, but I'm not 100% sure, but I think you're correct on that.
Okay, they could check with you.
So yeah, the bank statement program is a really popular one too. So if you're self-employed, that's always a little messy, because when we get your tax returns and all your income statements, sometimes income isn't always as high as we need it to be. So instead of using income statements, we might use your bank statements for the last 1 to 2 years to prove that you're making X number of dollars in income. And we do it that way and don't get into income docs, which is a big win.
Mm-hmm. Yeah, and those are things that traditional banks just can't do. So if they go down to a traditional bank and they want to do a DSCR loan or a bank statement loan, they're going to say, sorry, it's not a Fannie Freddie product.
They are. I worked for a big bank for 40 years and they do a great job, but they offer your vanilla products, your FHA, your conventional VA, RD, but Movement offers a lot of other products in addition to FHA, conventional RD, VA, etc.
Yeah, and that's wonderful to have all of those options when you might have been told no. Really, the answer could have been yes. It's just who you talk to. And let's say somebody, likes to do things local. So that, like on the reverse, for example, they could call Fred Thompson, on TV, not really Fred, but you know what I mean? They could call his company.
Or Tom Selleck, yeah.
Or Tom Selleck, yeah. Or they could call you.
I'd call Tom Selleck. Most women would, John.
That's probably true. But let's say they want to do things local. Like I like to do things local because I can drive over to see you or whatever. We can meet, we can talk, we can do a Zoom meeting. And so I think that personal touch is important, especially on something big like a mortgage. And so let's say I'm living in Minnesota, but I want to go buy a house or a second home in Wisconsin or move to Florida, Arizona. Can I start a loan with you, Lynn, here and have you carry me through the process as
You can, John. Movement Mortgage has loan officers licensed in all 50 states. So if somebody calls me, for example, I'm licensed in Wisconsin, Iowa, and Minnesota. Let's say you called me and said, Lynn, I want to buy in Florida. One of my friends is licensed in Florida. So I would start it and then pass it on to her.
Fantastic. Fantastic. So really, you're just a wonderful resource in that way that somebody doesn't have to feel like they have to find somebody in a different state. They can do things local and then know that there's a connection that they can stay with that'll guide them through the process.
Yeah, at Movement Mortgage, our slogan is we exist to love and value people. And so we try and find a lot of ways to do that. And that's one of them is if we know that we can't help you, we'll pass you on to somebody who can. So
wonderful. Yeah, that generally comes back, the karma thing. So
it does. Do you want me to list? I have a little list here of cities that have down payment assistance. Do you want me to read the list?
Yes, I think that would be valuable. Yes.
I know we sort of got off the track here, but I just want our audience to know that some cities have programs. And I do want to make a little disclaimer that whatever cities I tell you about, the rules can change, the money can change. Sometimes it's there, sometimes it's not. So just know that it can change. So my list says Anoka, Blaine, Bloomington, Brooklyn Center, Brooklyn Park, Coon Rapids, Fridley, Minnetonka, Plymouth, Roseville, St. Louis Park, and Shoreview. talking about the city, so in Minneapolis, there's some neighborhood assistance programs. For example, there is Central Neighborhood, East Phillips Neighborhood, Southeast Como, Columbia Park, Hawthorne, Weber Camden, and the Jordan neighborhood.
Wow.
So
So there's no reason.
there's some out there that, you know, people don't know about that aren't using that they could be. And then in the city of Minneapolis, there's the home program. So that's Minneapolis proper. Community Keys works in Hennepin, Ramsey, Washington, Dakota, and Anoka County, but they go by census tract. So you can't just buy in anywhere in Hennepin County. You can only buy if you're in a certain census tract, meaning a certain area. So it's something your loan officer, or if you work with me, I would definitely check and make sure that you, if where you're buying might be eligible for that program. One thing I did want people to know, John, is that there are a lot of nonprofits in the city and the suburbs, and they do free credit counseling and free home buying counseling. So a lot of people think they have to pay money for credit counseling, and they don't. A lot of nonprofits in town will do free credit counseling.
So
And
when you meet with somebody, oh, go ahead.
Well, I was going to say, when you buy a house, you want to get the absolute best deal that you can get. So that might mean cleaning up your credit. It might mean paying off some of your debt. It might mean saving more money. But if you meet with, well, I do all that myself, but let's just say you're not quite ready yet. You want to do a pulse check. You can certainly call me, or there are some nonprofits in town that you can speak to first. And they'll do a soft pull on your credit to see where your credit is. So.
Awesome. So my guess is you've got people at all different levels, meaning people that are ready to go today that are out looking. They just haven't found the right home. People that are maybe at a 600 credit score today that just need to get up to 640. They're in the process of rebuilding. So you've directed them to what they need to do and their proper agency to get their credit score up. And you know, they're in your queue, if you will. So that somebody
Definitely.
could see you a little early if they wanted, if they weren't quite ready, and then you'd get them ready or help direct them to get ready.
Absolutely. And here's what I ask people, John, is if I said to you, John, if I needed to borrow some money from you, what would you want to see from me? Would you give me a loan? Well, the bank's no different than you and I are. They want to make sure that someone has a good track record of making their bills on time. They want to make sure that they have some money in the bank. They want to make sure that they've been employed steadily. So the bank is no different than you or I. If we loan somebody a lot of money, we want to make sure we're going to get paid back.
Sure.
So we want to make sure people put all things together to make themselves look as strong as possible when they go to purchase. Another tip that you can verify with me is a lot of people right now are sitting on the fence saying, oh, it's winter coming. I don't want to buy a house in the winter. I'm going to wait till spring. Well, guess what? Guess who else is waiting till spring?
Mm-hmm.
Everybody else, right?
Right.
So buying a house in the winter might give you an edge to buying and waiting till spring, because in the spring there'll be a lot more competition.
Totally agree. And right now I just had 4 listings and they all sold here, but each one of them had a significant price reduction because of the pause and the higher rates and the lack of buyers. There's more inventory today in any given price range, and the sellers are more motivated today than at any time I've seen in the last 5 years. So if I was a buyer, I would take advantage of the disparity in the market and buy today. I can always refinance if that opportunity presents itself. But I've got my home and then I'm not competing. If rates drop, what will happen? More buyers will come in the market. Then you'll be in competition again with multiples and potentially having to pay X over list. Whereas today, it might be possible to get a price reduction. I had one home, we dropped at 50,000, another one 25,000, another one 30,000, another one 35,000. So this all happened in the last 30 days. So right now it is a fantastic time to be a buyer if you're thinking of it. Don't let the media, create the, stop you from making the right decision for yourself. And with Lynn's programs, my goodness, you only need $1,000 with the Minnesota Housing Finance Agency. So it's not like you need huge down payments. Lynn, if you qualify, Lynn will help you get all of these, and She'll stack them for you. If you're eligible for a stack, meaning you can use more than one. And there's no harm, and the call's free. The appointment, you're not going to get charged to come and visit with us, and we don't bite. So I would encourage people to sit down and explore it. And if now is not the right time, it's not the right time. But you don't know what you don't know until you sit down and have that conversation. And you might be pleasantly surprised that now is the right time.
I do have some resources, John. So if somebody were to reach out to me, I would send them the link to a free home buying class, as well as I have a booklet that's really good that talks about credit, what have you. So if you're interested in any of those things, please reach out and I'll email them to the audience. So
Awesome. Well, Lynn, what is your phone number? If somebody's watching right now and wants to pick up the phone and call you, what's the best way to reach you?
my number is 612-232-5743. And John, I take calls till 9 o'clock at night. I'm a full service lender. So if somebody works during the day and they can't call me during the day, they can call me up until 9 p.m. They can call me on weekends, and I'm very happy to help. I'm all about education.
Fantastic. That's full service. That's without a doubt. We're going to have in the body down below in this email, we're going to list all of Lynn's contact information. So if you didn't catch that number, it'll be down there, as well as her email and her website and all the other information you need to contact her. So she's available. She wants to help. She's a very nice person. I would encourage you to give her a call, start your loan process. In the way that we work together, Lynn is a loan officer. I'm a real estate broker. We work together. However, we are a la carte. So if you're watching this video and you're like, wow, Lynn's awesome, I want her to be my loan officer, but I already have a realtor, that's just fine. You can work with Lynn directly and retain your agent. Vice versa, if you already are pre-approved with a loan that you're happy with and you don't want a second opinion, I would love to work with you and take you out, set up a search, and give you my experience within the marketplace. So we're a la carte. We'd love to, though, to work with you as a team. So, but just know that you can work with us separately if that's what you choose to do. And with that, Belinda, is there anything else you would like to share with the audience?
Just want to remind everybody that it's important to get educated. It's important to know and understand what you're doing. A 30-year mortgage is a commitment, but it's also a great way to help build wealth for your family and your family's future. But we just want to do it the right way, the informed way.
Awesome. All right. Well, Lynn, thank you for stopping by today. I'm going to go ahead and stop this recording and reach out to us, audience, if we can help you. Thank you.
Thank you.